Yo. Welcome, everybody. I'm Zach.
Parker here with the Titan Investment Experience Podcast.
Yes, sir, the TIE Podcast, installment 1.
So today we're going to be going over a lot of general stuff for investing, long-term especially. We want to go over our experience a little bit. I've been trading for about 7 years now. Zach's been trading for a number of years as well, right?
Yes, sir.
And so we really sort of wanted to bring our experiences to light and sort of help you guys learn how to invest and trade along the way as well. And so we want to go over a lot of informational stuff, a lot of educational stuff to help you guys especially. And we also want to go into sort of what's going on in the market and what we've learned and what you guys can learn too from the day-to-day action that's taking place on Wall Street.
Yeah, exactly. So the first half of the podcast will probably be more related to just education and investing and trading in general. And we'll start simple and basic here. And then we'll go into some other aspects such as like what plays we're running or certain positions that we're in, or maybe like the state of big tech, things of that nature, like how the overall market is doing. We'll go into things of that nature in the second half, but the first half will be more educational, how to get started today, all that kind of stuff.
Right. So we're really going to look at a lot of, fundamentally what to do when you're investing, and we're just sort of presenting information that's out there. We're trying to make it concise and easy to understand because so many people, especially young people, say, hey, I want to get into investing. Investing in the stock market is something I really want to do, but it's not necessarily the easiest thing to get started. But I mean, Warren Buffett even said it. It's not rocket science, though. It's
Exactly.
not the hardest thing.
And this is one thing that I actually experienced years and years ago. When I was first getting into it, I actually got into it when I was really young, and then I got turned off to it because I felt like it was so complicated, and I was told things from so many different areas, so much misinformation about what the market really was. And don't get me wrong, it is really complicated, but it's definitely not as complicated as a lot of people make it seem. So that's why I think that we just want to provide a nice base for people to start, because I don't think that there's a lot of people doing that out there. There's a lot of specific things that people talk about, and a lot of like specific aspects of trading that a lot of people talk about, but not really how to strictly just get started, how to get into the market. Because there's millions and millions of listed companies. There's so many things to invest in.
Absolutely.
Different ETFs, different options, different everything. So we just want to make sure we help people get started.
And one thing that we really want to look at doing, especially for, beginners as well, we've done this for a number of years, so we have a good amount of experience, and we know complicated and complex strategies, and we know various aspects about the market in general. But one thing is, you go on YouTube, you go on Facebook, Instagram, and you get an ad and it says, oh, click here to learn how to make $5 million investing in the stock market, or, oh, click here for my top 5 favorite stocks, And a lot of that stuff is BS, just to be honest. Like you're not going to learn how to make $5 in 2 days in the stock market. Investing is a fundamental thing. It takes a long time, but it really is the biggest wealth generator in history.
Yeah, so on that note, first we should just, I think, talk about the idea of investing in a company. So like what it means to truly invest. So like a lot of people just think, yes, the stock and the company are two fundamentally different things. But when you invest in a company, you're helping that company raise capital, and you're helping them make money to go towards the procedures that they're involved in, what they're doing.
Right, reach their next goal.
Exactly.
Their next step.
So that's another thing is when you look at it, you're not really looking, at first at least, it shouldn't be looking into the technical analysis of charts, but if you're going in for the long haul, which is what we're talking about here first, so just investing for the long haul, investing in good companies, you really just want to look at the company, not really like check what their chart's doing. Maybe you want to see if they're on the uptrend or downtrend and see which direction they seem like they're going, but don't look at the technicalities. Like don't go into a bunch of strategies early on. Just make sure if you're investing in a company for the long term, you think that company's a good business, they have a good structure, and they have good plans in place for the future. And I think that's the most important thing.
Right. And I think one thing that a lot of people get caught up on, mistakenly, is they look at historical patterns. And don't get me wrong, you can learn a lot from that. But if you're looking strictly at the historical pattern of a chart, it's not always going to help you.
Yeah, exactly.
You want to look at stuff like, if you look at the chart for a company like Blockbuster, maybe 15 years ago, they could have been really low, look good for a prime entry. But as we know, they're extinct now. There's a lot of companies that are just a shell of what they used to be, and you don't want to invest in them. That's, you want to look for the next upcoming trend when you're looking towards investing.
Exactly. And I think that's why we see a big shift into the tech industry and stuff. So I think that also leads into the next point of understanding, especially for the long term, which is what we're specifically talking about right now. You're looking at dividend plays and conservative plays versus actual aggressive growth. And so I think when you look at a lot of the companies that people are obsessed with today and that a lot of people tend to fluctuate to today, you look at like Apple, Microsoft, um, Amazon, like these are all like pretty low dividend stocks, but they're high growth. So the idea is that the growth pays for what the dividend would typically pay for in a different company, like let's say like Johnson and Johnson or a JP Morgan Chase or things of that nature. So I think that the smartest thing, and I wish that somebody had told me when I first started trading, would be I think just go online and look for maybe the top 100 companies in the world. Look through those companies and get to know, because those are the companies that have seen the most success in their lifetime and that have probably been around for a long time and will be around for a long time. So I think when you look at that and you start to understand them, just look up their charts, look up the stock, look up the company, what they're doing, what they're involved in. Like for example, let's say I love Apple products, let's say, and I see that their stock is awesome. Most valuable company in the world, they're a great stock. Maybe that might be a prime stock to buy right now. So if I'm interested in that, maybe I'll go look online and see, oh wow, Apple's releasing their 5G iPhone in September. Now the market's a little weird right now and there's a lot of stuff going on, but maybe I'd say, oh wow, this provides a prime opportunity for growth in the future. So maybe this is a good time to invest. But then that goes into where you look at their price compared to where it's been or how it can grow. But I think just looking at where a company is and then investing in that company for the future, because a lot of the stocks that you're investing in for the long term, you should just buy them and just not look at them. So a company like Apple, maybe Microsoft, like these companies are going to grow and their stock going to grow along with the business. So I think it's smart to just leave it and then let your money grow.
Right, absolutely, yeah. I think that when you're investing long term, you're investing for years out. You're investing for the future. So that being said, you don't really want a stock that's just going to jump 50% next week and then go right back down to the dumps. But you also want something that has that perspective to provide growth. And I think when you're investing long term and you're building that portfolio, that's where it's really important to diversify well. You know what I mean?
Exactly. So I think that's why you also want to look into the diversification between not just sectors. So like, for example, it would be smart to have maybe a tech company in your long-term portfolio, then also maybe a retailer like Costco or like a Walmart or something of that nature. And then maybe also a pharmaceutical company like a Johnson and Johnson or like a Bristol Myers Squibb. So I think you also, along with separating through sectors, it's smart to separate between aggressive growth in companies like Apple that are growing quickly, Amazon, which is growing really quickly, and then also companies like I already said, Johnson and Johnson, which is grow slower, which is still a big company, but growing slower and providing a larger dividend yield.
Right. I think another good example of that would be AT&T, right?
Exactly. Yeah. Slow growth, but high dividend, about 7%. Huge. Same with Ford, although they've been on a downtrend.
Right.
Ford, huge dividend.
Right. That's another important thing to look at. You want to find these dividend titans, these companies that are paying huge amounts, but you want to be careful to see that they're not on a downtrend. You sort of want to catch them when they're still in a good position. And some of these companies like General Mills, AT&T, they have a lot of fortitude within the market. They don't really get affected a lot.
Exactly. So yeah, that would lead to the next point of let's say I'm an individual and I'm first entering the market. How do I enter? Do I have $5,000 in my hand and I just buy all one company? And I think it's smart to talk about how, as an individual enters the market, let's say I have $5,000 right now I want to invest and I've never invested. I'm not just going to go out and put $2,000 here, $2,000 here, and 1,000 into this company. The best strategy that a lot of people talk about, and it's true, is easing into positions and first buying into a position and easing in to make sure you're getting in at good prices and at appropriate price points for maximum profit, even if it's for the long term.
Right.
It's still smart. So like averaging down your cost-based average, all that stuff, which is like the average cost at which you got the stock. So let's say Apple is at a certain price and then they dip. I buy into them at a certain price. The next week they dip. Maybe I buy a little bit more. But you don't want to put all of your chips in the same area at one time. Buy into the stock slowly.
That's really important, especially when you're really building a portfolio. You want to see about how you can scale into these positions and do a lot better. And there's also, you can always overpay for a company.
Exactly. And no matter the company.
Yeah. No matter the company. Coca-Cola, for example, there was a chart, and I don't remember the exact years, but it showed a 10-year spread. Coke revenue was up over $40 billion across those 10 years. But the company dipped down. It just had a cyclical dip, and over those 10 years, it was at the same price point. So 10 years, the company grew, they had more money, but you didn't make any money off those 10 years. So it's really important to not get in when the market's overinflated, when it's oversaturated, when you're not going to make any money right away.
Yeah, and this all comes with like keeping up with the news. which is a really important point, is that you want to make sure you're keeping up not just with the general news, but specific news with your company. So, like for example, let's say with Microsoft, there's a certain tax maybe that's imposed. Maybe, for example, we have elections coming up. Maybe a certain nominee gets in that'll impose higher taxes, maybe lower taxes, whatever it may be. Paying attention to all those things is super important because they're going to affect each and every company in different ways. And especially with big tech right now, I think it's important to just pay attention to the surrounding news in the general world and the general market, and then try and understand how that links and affects certain industries. A lot of the market, which a lot of people don't talk about, it's just a lot of common sense, honestly, like seeing how businesses are going to be affected, how one business might go up or down.
Right. Yeah. Especially with the way that the market's playing overall, it's important to look how there's various aspects playing into it, like what you just said, whether it's going to go up or go down, and that can be affected by a lot of things. It can be just the cyclical manner of the economy and the market overall. It can be what news is coming out, the political atmosphere, the global atmosphere, and I mean, people were joking that a couple years ago the market would go up and down when we were in the trade war with China at the height of the trade war. Positive trade talks, market flies. Negative trade talks, market dumps.
Exactly.
And then now people are saying that vaccine news is
exactly
the new version of trade talks.
It is. Yeah, it is. And you see the market just go up and down based off just like one news article. Maybe Moderna, for example, one of the big companies in the race right now, has a great phase 3 trial. Everything's going to skyrocket.
Right.
They don't even have, So it's all based on news right now.
Yeah, it's really a lot of speculation, and that's what
potential.
Right, potential. And what we want you guys to fundamentally understand is investing in a company for what it is, and not just speculating on a gamble. We want you guys to fundamentally invest in a good company that will provide long-term growth, like Microsoft or Apple.
Yeah, so all right. Hope you guys enjoyed that podcast. That was a Titan investment experience with Zach and Parker. Have a great day and peace out.